And good morning and welcome to the VSA Capital 5-Minute Morning Miner. And I know that Ollie's been talking to Paul most of this week because we've had a really crazy, hectic, busy week at VSA Capital. In fact, the markets are really starting to get very active again. But it's Friday the 10th of September. And Paul, how are you this morning?
Well, thank you. It's a little bit overcast here today, so maybe it'll be cooler.
Well, hopefully, because it was getting pretty hot in temperature-wise as well as business-wise this week. And when you're wandering around the city with companies, it's that hot. It's pretty uncomfortable. Look, the first thing I'm going to do on this podcast actually is apologise to you, Paul. You were right on uranium. The price has gone through the roof.
Well, all I could say is that it needs to become sustainable, not just a one-off thing here. And we'll definitely see whether or not the major players will essentially hold off until they can get some real sustainability in the price as far as demand is concerned.
I see that. I think it's Sprott, is it, that has launched a sort of a yellow cake equivalent over in Canada. Is that right?
Yes, and the main point you would want to make on that is that what it's going to take is essentially firms to raise funds in order to take yellow cake off the market, essentially to stockpile it away from the utilities in order to get the bid prices higher on long-term contracts. That may be, or it may be a short-term solution to that issue.
But you may say I'm doubling up on a bet that's gone wrong, but my view would be actually often when funds do things like this, they're often doing it at the top of the market.
Yes, and because that's when the most investor interest is when it finally gains some attention, whereas the bargains are made when nobody otherwise wants to buy it.
Correct. Having said that, I would just say, I know we need to get onto the news, but actually what we are seeing at the moment, I don't know if we should probably, actually this is news, but Millennial Lithium, who we first took to China and got their first Chinese investment, and then obviously Ganfeng came in and bid for them. And now there's a counter bid for Millennial Lithium, and there's a sort of a bidding war for lithium. And what we're seeing at the moment, I think you'd agree with, Paul, is that actually a lot of people are desperately trying to secure their long-term supply of all the battery metals and critical metals at the moment. And actually these sort of, they're not really exploration. They're more the junior miners, should we say, that have got big positions in, be it lithium or vanadium or tin or copper or tungsten, et cetera, there is going to be a massive clamour to secure these companies and the supply, I think, over the next 2 years at least. There's going to be another big wave, I think, of price upside in some of these junior miners. Would you agree with that?
Well, I think one of the things is Robert Friedland had talked about what they call what he called the revenge of the miners, and what he was referring to was the sad valuations across the whole sector, and particularly the deep discounts on valuation for the earlier stage companies that weren't yet in production. But now that there is a clamor, if you will, for these raw materials, we should have a very strong market for valuations on the junior players that have actually come up with some good deposits.
I think we're going to have quite a couple of years, to be honest with you. But anyway, let's move on. What news have you got this morning, Paul, that can interest all our listeners?
Well, we have, first of all, an operations update from the newly London listed by VSA Capital, Caracal, the African gold producer in Kenya. On the Kalema Pesa mine there, they've going to have the mains power hooked up to the processing plant by the 1st of November, they think, and that would dramatically drop the operating costs from what is a diesel plant power option at this point in time. The cut in operating costs would be about $100 an ounce, they think. So, as well as the improvement in its carbon footprint as a result. So they're really looking forward to that in particular. They've also acquired 2 new drill rigs in order to accelerate the exploration activity around the mine, not only underground, but also doing some trenching on some potential open pitable ores that they've are aware of. The other thing is they have a pilot scale heap leach underway, with a decision on whether or not they'll put it into a full-scale deployment for heap leaching of low grade in the next 90 days. So they're not standing aside at all. They're moving quite quickly here post listing.
Very good. Yes, as you said, is a corporate client of VSA Capital. So good to see. Good news. What else, Paul, have you got for us?
We also had a report out from also VSA client, this time the lithium clay explorer in Nevada, American Lithium. They specifically were doing some optimization in order to see if they could pre-concentrate these clay ores in order to have a lower footprint on size of the plant and reagent usage and that sort of thing. And the using conventional pre-sort equipment, they have come up with some real good results for about a 60% improvement overall in the efficiency, essentially, that they will be able to build into the plant and operating model. So that's also very good news there.
Look, obviously, we've started this conversation off a little bit with Millennial Lithium and how that we're getting, competitive bids for them. I think American Lithium is a stock that really everybody should own at the moment. It is obviously on the TSX. We've talked in the past about maybe getting them a dual listing on Aquis so that they can come to London, and it would be great because then it's what everyone should be buying.
Yeah, I would agree with you. These clay plays are going to be a lot more substantial going forward in the lithium space than what most investors or particularly institutional investors have been willing to accept or understand and accept at this point in time. So a very good position to have.
Okay, anything else you want to quickly mention, Paul?
I did, yes. I have to talk about Sol Gold here with that latest hole 13 they released today on the Tandayama porphyry. That porphyry is only 2 kilometers from their existing Alpala deposit, and it was the reason why the company deferred the issue of the pre-feasibility study was in order to drill this thing out. And now we see why, because they've come across this hole, which is over 1,000 meters, beginning near surface at 0.55 copper equivalent, including interval in that hole of 132 meters over 1% in grade. That means that this too will have to be, or ought to be, incorporated into the overall mine plan and infrastructure layout. So it just means it's going to be bigger and longer life operation for Alpala than what was previously being designed before.
Okay, also worth mentioning, I think we will be releasing a very interesting video interview today with Brett Boynton of Tectonic Gold. I know you're desperate to see the assay results, Paul, of the latest round of drilling, because I think you would describe it as tantalizingly close to something really major. But it's quite an interesting video because we do talk about, as much as we're allowed to, what is really happening there and what the majors are doing and how this is all going to end up. And I think when anybody watches the video, they probably like to become a buyer, and because you can quite easily see how, with a fair wind, it all has to be said that this can be even from here, a 10 bagger.
Well, I know I'll keep an look for it then when you get it released.
It'll be up pretty soon, I think. Okay, let's call it a day there, Paul, and we'll be back again next week. Everybody have a good weekend.